As international crude oil prices continue to fall, the futures contract of crude oil, a wealth financial management product of the Bank of China, left investors with a negative price value. In addition to that, they have to pay back a huge amount of money owed to the bank. A large number of investors have gone to the Bank of China and China Banking Regulatory Commission to protest. On April 21st, the delivery price for West Texas Intermediate crude oil dropped $50.90, which represents a decline of 306% for the month of May, and closed at negative $37.63 per barrel. The negative oil price turned the net worth of Bank of China's futures contract of crude oil negative overnight, with an estimated loss of more than 30 billion renminbi, making it one of the biggest losers of the negative oil price situation. Since Chinese retail investors are not allowed to directly participate in the international oil future contracts markets, called the Futures Contract of Crude Oil, in January 2018. The bank unifies the trading of offshore accounts so that the Chinese retail investors are able to participate in the trading of international oil future contracts. The Bank of China makes profits from managing these accounts. A victim of the Futures Contract of Crude Oil, Mr. Liu, indicated that the bank did not disclose the fact that this was a futures contract trade when it encouraged the investment. He added,
"The price of crude oil is lower now due to the pandemic, but the advertisement of futures contract of crude oil is so good at persuading ordinary people to invest. This investment should not be a futures contract, and I would certainly not make such an investment because the venture capital testing show that I am of a balanced type."
It is understood that futures contract of crude oil has always switched position during the second to last trading day, and April 21st happened to be that day, coinciding with a huge plunge of New York oil futures. When the Bank of China was switching, there was no counterpart at the stock market who was willing to take over. In the end, the final statement was at negative $37.63 per barrel. A Chinese finance scholar, Jia Bin, believes that Bank of China is extremely unprofessional. He said,
"It was the delivery of crude oil from the month of May that they were dealing with, and if they were not waiting to physically deliver the crude oil, then they should have switched to position. The other banks like the Industrial and Commercial Bank of China, ICBC, did, but the Bank of China did not. In fact, the Bank of China forgot to stop and close the position. Typically, a loss of 20% would require a stop and closure, but the bank did not do that."
Netizens lashed out. It is definitely a bank operational error on the futures contract of crude oil. Not only did they fail to qualify for delivery, but also did not switch the position at all. They even allowed automatic trading. This would cost banks a lot of money in the US, but in China, the Chinese investors would either die from bankruptcy or protesting.
They withheld all my money. After they deducted the principal, they further took away the rest of the money from my bank account.
According to the bylaws of the Bank of China, the offshore bank accounts executive demand simultaneously when retail investors place a trade order. This financial commodity requires a 100% margin and is set up to offset when the loss reaches 80%. This means that when the principal suffers an 80% of loss, the investor will be forced to liquidate.
It is clearly stated here that you may lose 100% of your margin, so you cannot have a negative value. Besides, when it stops trading at 10 o'clock, the price at which it stops is definitely the trading price. It is obvious that the price dropped to negative within minutes. Why did the bank not stop and close the position? The assistants never came back before April 21st, and there's no way to personally move the position. It has to be the bank.
On April 22nd, the Bank of China issued a statement denying the operational error and the duties of the May contract, taking no responsibility for the loss and placing it all on the investors. Mr. Tong expressed they are preparing collectively to seek compensation from the bank and file a lawsuit against it. He added,
"Right now, as a group, we want the bank to return our principal. At most, calculated based on the time when trading stopped at 10 o'clock. After that, the risks should be undertaken by the bank."
Because of the negative oil price situation, The investors not only lost all their principal, but also now have a debt that is 3 times higher than their principal. Mr. Liu said that there are more than 1,000 investors in his group, and their preliminary estimates calculate a loss of over 70 million renminbi. He continued,
The bank sent a text message saying that we need to make up for the margin, which is the security deposit we paid. Let's say I bought 90,000 RMB, 12,000 USD. Now I have to pay them back around 150,000 RMB, 21,000 USD. The bank took away my principal and now wants me to pay for the security deposit. I'm just a farmer who sells cattle, sheep, and lands, and I have no way to survive now that I have lost all my principal. And they still want me to pay them more than 100,000 yuan. All of a sudden, I owe them 3 times more. This is too much.
A video was uploaded by a netizen showing a man preparing to jump off a building in Longitude and Latitude Garden in Heshan, Jiangmen City, Guangdong. Many people tried to hold him back, but the tragedy could not be averted. Netizens said that the limit for credit cards are being charged after the balance of the savings card is 0 for those users of the futures contract of crude oil, forcing people into death.